through the 13th. Let's get started. First things first, we know there's risk in trading. Please always use trade capital only. You know the deal there. If you're following me on social media, best place to find me is right here on the YouTube channel, youtube.com/Chris Pulver. I also stream this on Facebook and Twitch, I believe, and also on Periscope, which is through Twitter. So real handle, verified handles at Chris Pulver. My Discord channel is Chris Pulver Trading. I'll share that in the YouTube session here in just a moment. Here are the charts. Let's dive in. Take a look at the overall markets. Market breadth. We'll look at the SPY, the Qs. We will look at the dollar index, oil, gold, silver, some currencies. Last week, big rally on Friday. Kind of the I don't know, felt like kind of the kitchen sink saved the week. Not a lot of volatility other than a couple of dollars. And then we have a $9 rip on Friday to finish up right around 427. Was down to as low as 420 and change for the week. We test that low all week, Monday, Tuesday, Wednesday, and Thursday. So big rip to the upside. Is there momentum here? We're going to find out. The weekly candle still shows indecision. So I think the appropriate play this week, we'll talk about this in the trading room at 10 o'clock, and how I'm looking to position myself this week is I might look at another butterfly spread where we do something where I'm looking to, kind of box this in where if we get pinned around 425 or 426, we make some good money there. On the upside, we still have some credit spreads. If we break above 432 and break below 422, then those pay us well. And we could look at possibly some out of the money straddles this week and looking at a long call, long put to see if price wants to go anywhere. So either way, I mean, if I put all the positions on where it's kind of, if price goes up, I make money. Price goes down, I make money. Price goes nowhere, I make money. I just need to make sure that the money that I make is at least a 2.5, to 3x return. So I'm at least covered as far as the risk goes and walk away with some net profits this week. The best return is going to be probably something where we have a big break to the upside or big break to the downside, or we sit right at the pin level if I'm doing a butterfly spread. So again, we'll talk about that at the top of the hour with some equities on demand. Let me log into the channel, say good morning to everybody, and then we'll dive into some other instruments. All right, Don is here, first in the house. Nice to see you, Donnie. Good morning. Andrew, good morning. Jacob, good morning. David, what's happening? And good morning. Nice to see everybody here. We'll do good morning, everybody. Okay, economic calendar for the week. I think the big news is going to be CPI data. Last week we got through non-farm payroll, ADP. Obviously, the market probably did something somewhat counterintuitive on Friday, just because it was sitting at 420, 420. But I say counterintuitive, meaning I think people expected, a hot jobs number, market's going to drop. I mean, just honestly, it was more of a technical trade on Friday. I think there was a big short squeeze. All of the potential shorts that were like forcing positions down below 420 on the SPY really had some serious pain on Friday with the one-day rally, and that was a $9 plus rally. It was kind of ridiculous. It hit an entire weekly trading range in a single day, which is unusual, but that's what the market does. That's why there's weekly trading ranges. That's why there's daily trading ranges, and the market just continues to still have a high amount of technical obedience that we watch for and really make a lot of sound decisions on, and then we're just fundamentally aware. At least that's my style. Okay, so going into this week's trading, bank holiday today, which I'm not even sure what it is. Columbus Day. So we have bank holiday. I'm assuming Wall Street is closed today then? All right, well, that caught me off guard. So I guess we'll be looking to place trades on Tuesday, which is fine. We'll still have class. No big deal. We'll talk about everything. We'll look through the portfolio. Expiration-wise this week on the 13th. I don't know. The market might do something crazy and spooky for October 13th. Who knows? But that's fine. We can talk more, and we're not having to make like crazy, short-term decisions for today if the markets are closed. So happy Columbus Day. And then on Thursday, we have IMF meetings this week. On Thursday, I know we have CPI for the U.S. Here's PPI on Wednesday. So there's going to be some inflation points this week on Wednesday, Thursday for the U.S. FOMC minutes on Wednesday as well. Core GDP or GDP month over month for the pound. There's your core CPI month over month, year over year for the U.S. on Thursday at 8:30. Forecast 3.6. Okay, we were looking for this last week. It wasn't there, and here it is. So they're looking for a slight improvement. Trueflation is probably still sitting around like 2.6, 2.7. Inflation rate. What is this? This changed. Average American purchase power has been eroded by 20. Yeah, okay. Well, that's not That's purchasing power. New. Okay, well, give me some. There it is. I just wanted inflation rate. 2.47. Well, that's nice. They added some stuff. See, trend over time. This is pretty nice. So trueflation.com just updated their website. Looks like it. They're providing a lot more data here. Hires, total, layoffs, initial claims. There's also kind of a macro trend that I was watching as well. We talked about that in the trading rooms. So anyway, what my focus was initially was this U.S. inflation rate. The forecast for this week's print on Thursday, the year over year is forecast to be 3.7. This is sitting at 2.47. However they get the number, it's third party, it's different. Uh, but I'm just curious, where this is trending. For example, if this is trending higher, I would imagine that what we see print on the economic calendars would also be trending higher as well from month to month. Okay. All right. David says also Canadian Thanksgiving. There you go. Sounds good. Okay. So that's the big print. I don't think there's anything past Thursday as far as where the market's going. Friday, we have Bank of England, U of M sentiment. Okay. Sentiment-wise, what's the print? And also this AAII sentiment survey right here. The bulls continue to creep up a little bit higher. Week ending 10-4. Why are they ending at 10-4 on Wednesday? I really am not sure. After Friday's print and Friday's day, I mean, does it get any more bullish as opposed to bearish? What's interesting though is when we have seen this creep up into the 40s, typically I start looking for some extremes. Maybe things are oversold. Maybe we start to see this contrarian play where it's kind of the short covering, right? That's what Friday was. This is creeping up towards 40, 41, 42. The year high is 56. The last time we got up this high in the bearish sentiment side was May of 2023. So, earlier before the summer trading where we had that big rally and breakout. Okay. So I'm just going to keep watching, and we have indecision to get through, right? Upside on the SPY is 431, 432, downside is 420 now, and watch those levels. If we stay in between, this is what I look at for the month or for the week. If we stay in between, it wouldn't be a surprise, right? There's going to have to be some type of catalyst or push. Now, you can see that the market is defending this area, which is why I wasn't surprised to see that big rally. Obviously it was kind of silly how it happened just in one day on Friday, but the market is clearly interested in defending 420 for right now. Okay, that doesn't mean forever. If we break below 420 and there's more pressure, this could get really ugly, right? This low to this high, we could pull back in this 50% zone. Then the market has to make a bigger decision. Is that the play? Is that the play? I don't know. Okay. But if we continue to dance around here with indecision, I'm not sure what it's going to take to get us a catalyst to break higher or lower. I can see the market just seasonality wise, October to November, December, Q4, Santa Claus rally, holiday stuff, thinner market volume, possibly a drift going up just to kind of salvage any type of gains for the year. Or maybe the gains are already put in. The rest is all about indecision and protecting and not taking any crazy positions, just accumulating wisely. And maybe the market doesn't implode on itself. I guess worst case scenario obviously is that the bulls can't defend and it's indecision here, but then once the bears take over, it gets really ugly really quickly. And this, dramatically decreases. We come into levels that are, kind of threatening the potential bull structure we have. So I say we trade what we see. Right now I see indecision. I'm going to position accordingly. All right, I'll take a little stab at indecision. We have some trades out to the end of the month already for breakout. So I don't think, with that being position for equities on demand for the trading room, I don't think I need to necessarily put on a straddle high, straddle low for this week. I think I'm just going to play a butterfly, and then we have two credit spreads up here, two credit spreads down here, that if we get paid to the upside on the 20th or 27th, great. And this week we might be just positioning for 3 to 4x return. We had about we paid 40 cents. I saw it trading up to around $1.25, $1.30 last week. So this is for a butterfly spread. We paid about 40 cents for the debit. When it was rallying up around 429, 430, then drifted back down to 427, that was paying up as high as $1.30. So about a 3x return up for grabs last week before closing bell on Friday. And that's the type of setup that I like where, if it doesn't work, we know what we're losing. If it does work, we're close within, 50 cents to $1 of our pin price. We typically can grind out a 3x multiple. So anyway, we'll talk about that in class. And if the markets are closed today and there's, you know, no trading, then fine, we'll just get ready for it for tomorrow's entries. Okay. All right, let's get into some other measurements. Dollar index finally had a big indecision candle. Again, could the dollar come up and retest the highs before it breaks the trend line? Very possible. If you go to the daily time frame, this is where I think it gets really simple. We had a good stab last week on Friday. If you're in with me in the live session on Friday for this channel, youtube.com/Chris Pulver, we did buy the euro dollar and we bought the pound dollar, and we're going after a quick run to the monthly pivots. So euro dollar is back to 105.50. We were up as high last week as it was like 106. So we went from 104.90 to 106. We pulled back a little bit. I'm still looking for a run up to this monthly pivot. Just based on the technicals, daily oversold conditions on the euro dollar, daily overbought conditions on the DXY. Nice technical stab, nice little pivot cluster. So, could we go higher? Yeah, possibly. We could have this, right? We could have this high, this low. This market pulls back about 38% or maybe 50%, and we could go higher for that short on the dollar. But I think the easiest path to me is let's get to this pivot cluster. We don't have to break a trend line there. We don't have to really change any outlook. But if we have a reversal correction, 11 weeks in a row, we finally had an indecision week put on the dollar. I think if the dollar continues to correct at all, we'll find those pivots. So euro dollar, pound dollar looking good from last week. I'll stick with those right now to those pivot levels. Here's the pound dollar. Same thing. There's the pivot right there around 123.40. And we were up as high as 122.63 last week. And I think our entry was, let me see what the entry was on Flex. Entry was 21.29. So we got these in at market, so that's why they're not really, simple, but 104.90 and then 1.2129, and we're active in those positions holding to those monthly pivots. Okay. All right. DXY, like I said, cleanest analysis on the DXY is to wait for the trend line to break. And there's the trend line. So if this trend line breaks, looking for a topping pattern, looking how to trade it. If the market this week is coming back to retest the highs, remember CPI data should be a catalyst. That's on Thursday. We have PPI on Wednesday. So Wednesday, Thursday, Friday, expect some decent volatility intraday from the market. See what we get in currencies with volatility. But if you want to sell the dollar, best spot in my opinion is here. Okay, I took a stab at it last week on the euro dollar, pound dollar. If that continues, great. I'm already positioned for it. I got in early, got in small. I told traders last week and I took the trade. I don't have a stop loss on the euro dollar, pound dollar. I'm simply trading the probability that we're going to have at least a correction, just based on 11 weeks in a row. 12 weeks is very uncommon, especially 12 green weeks in a row. Okay, so anyway, we'll see what we get on the dollar index. Oil just just really tumbled last week, but now we have a huge gap to the upside at 86. Interesting. Energy stocks advanced pre-market Monday. Okay, so we do. I mean, it looks like we do have market trading today. SPY shows pre-market, right? Oh, it's opening bell now. What am I talking about? Yeah, so we have trading today. So happy Columbus Day, but markets are open. All right, cool. So we're trading. Good. Oil. Big advance in oil. Let's go to FinViz and see what that looks like for energy stocks. As we get things off and running, I'm looking to see if the energy heat map is really green. I'm not sure what the updates. I don't know. Maybe I have to wait another. Maybe this is hour by hour. Eventually, this will light up, red and green and what's moving and shaking for the day. But if we have a big pre-market gap in oil, then energy, oil, and gas probably all green on the day, which makes me wonder if this is green here, are we seeing our major tech move overall bearish? Maybe. Okay, so it's going to be an interesting day, but that's why we have diversification. But oil is, yeah, and again, that's kind of tricky, right? I mean, when this fell, I said that right back to the 200 EMA, this kind of 80 to 82.50 level, looking for support. Well, clearly the market's interested in some support because we're gapping higher over the weekend. So from Friday's close to today's open, market's interested in oil prices there. CPI this week, we're going to see if CPI pushes oil a little bit higher, maybe retest the highs again. There's channel resistance at 94, plus our pivot at 94.95. All right. So there could be, a gap fill, right? Gap fill on oil. See if there's a bid there. That's what I'd be looking for, honestly. And rather than just saying like, oh, it's bullish again, I would wait and see what this gap, if the market comes back and fills the gap, and then look for bullishness off of that, stop loss below this U-turn, and then see if oil wants to head back up and retest highs. I like that trade on oil. Gold and silver. I said this is all about the dollar. So dollar finally taking a drop. We could have actually taken that trade Friday last week. If we took a stab at euro dollar, pound dollar, which are strongly correlated currencies to the dollar index, taking a stab at gold didn't hurt. You know, there's a nice little weekly and monthly pivot cluster. Short-term gold traders are doing pretty well if they bought in, Thursday, Friday last week. Silver, same thing. 3-4 indecision candles, big rip to the upside, dollar weakness, and the big rip in the stock market. But that look for today's candles not great. Even if short-term we came up on silver towards like 20, looks like 22 and change, $22.20 perhaps. But like I said, my concern is that there's enough structure here that maybe this damage is done. We break, we retest, and we go. So I'm still focused on buying silver. Where at? If I'm looking at the bigger technical levels, if silver is going to come back and retest this accumulation point around, this is September of last year, $18 and change, or all the way down to $14 and change, that's where I'm buying silver. I'm already in it. I already have a break even around $17. I'm just going to sit and hold. Okay, Bitcoin, chart alarm set. We're at 27, roughly 27,500. Up here towards 29 has not broken the highs. Down here at 20, just below 25,000 hasn't broken the highs. So we're still watching to see intermediately, break 29 or break 25. And then the bigger range is break 32 or, maybe even get it back to 20. So I'm not sure. We broke this trend line. I could see, for the bears, it'd be pretty easy to have a high, low. The way this is behaving, looks like another leg could come lower. And if we get below 25,000, I would say we're likely coming all the way back to 19 or 20. Okay, now again, that offers up a potential buy opportunity, take it back up towards 30K. If you're looking for opportunities right now, who wouldn't mind in a, maybe a 1 to 3 month trade making 50%? I would, but it might be a little bit of timing, watching these levels, watching this instrument to see how things correlate. Okay. All right, a little Bitcoin there. Any FX pairs you want to trade? Any currencies you're looking at? We are still riding some profit on our Aussie New Zealand from a 108.20 level. We're now up about 200 pips. I'm happy about now. If we officially get 200 pips or get to 106, I'll start protecting those profits on the Aussie New Zealand. We took a stab at the euro dollar, pound dollar last week. We had some robot trades doing pretty well. And right now, that's about it. Our Aussie dollar, with news this week, if the dollar gets weaker, then our Aussie dollar, we're looking for this thing to rip back up into like 6,600. So we're positioned for that. The New Zealand dollar, we are positioned for that. We've been bullish right around this current 59.50 level, so we're looking to get this back up towards 6,200. We also got filled on a stop sell on the dollar CAD, which is also proving pretty solid. We're up about 45 pips right now. So got some positions running, profits were running in, that's great. And then the rest will kind of see where they fall. But pairs wise, let me check my portfolio trader. I do have some webinars on it this week. We have classes Monday, Wednesday, Friday. I'm just going to do a check on the account, see where it's at. We were up, I think, as I posted last week, Portfolio Builder. When we did class on Friday, we were up 259 pips. We still have plenty of upside. I think the highest point we had over the last week or so, we were up around 600 pips. So let me see what that was. This is 290, 259, 291, 475. Again, these are all positions that we're buying and holding. I haven't closed positions. These are some of the entries that we've taken. Spot check 597. So that would have been back on the 28th of September, up around 600 pips. Okay, we've had some pullbacks. We've had some re-entries. That's good. I wanted to get filled on pullbacks, so we have bigger trade sizes to take our profits. So let me check and see where we're at right now. Let's check the currency strength chart while we're at it, see if the Swiss is down. Okay, so right here, Swiss is on top of the food chain today, dollar is down. So I don't love seeing that as far as, how I'm positioning for Portfolio Builder. But, a stronger Swiss just means a little bit more pullbacks. We'll get some of those fills we were after, and it's fine. That way I can build some trade sizes up. It doesn't look like anything's changed, except I finally got filled on the pound Swiss at 1085. Hooray! We've been waiting for that to fill for like 3-4 weeks. Aussie Swiss is the same. CAD Swiss is the same. New Zealand Swiss. Let me check my break even on New Zealand Swiss. 53.64. Yep, that's the same. So break evens are the same. Pip wise, things are fluctuating, oscillating. We might be just a little bit positive today. So minus 2.8, plus 57, minus 6, minus 23, plus 38, plus 77. So right now, spot check and open positions so we have 6 currency pairs running now and 140 pips in profit. Which I say all that, I mean, it's building positions. So there's going to be a lot more trades ahead, and I want to get filled on some of those pullbacks. I want to build my position size. Margin wise, right now I've used around $984 of my $10,000 account, so I still have over 90% margin available to trade. So that is a good thing. Okay, real quick, let me post a link to my Discord channel. If anybody's watching this recording hasn't joined the channel, hopefully this link will work. I always post this with an unlimited expiration, so never expire. Here's the copied link, and this is Discord channel. There we go. And then also, if you wanted to check out my video series, I have episodes 1 and episodes 2 of my Trader's Path. Oops. To 100% video series. So check out those videos as well. I'm trying to think, I have like four accounts or more. I think I've got 4 accounts right now that I'm focused on, all trying to double. I'm trying to double those accounts in the next 6 to 12 months. Not doing anything silly, not doing anything crazy high risk. Using equities, positions, fractional and whole, using options, lower cost basis, and juice up some of the alpha. Using currency trading and positioning with positive rollover and getting good technical setups. So I'm trying to double a Forex account, trying to double some stocks and options account. Again, I have no control over what the current market environment is. If we have a lot of indecision, then the best thing I can do is probably let my robots work in the background, keep my cost basis low, keep my buying power high, and then wait to strike when it's appropriate. So it might take some time and some patience, but historically, when we have the market's interested in a Q4 rally, sometimes it's Q4 rally, sometimes it's Q1 rally. If it's both, great. If it's not a great Q4 and it's a great Q1, okay, great. I don't know. I mean, I'm trading just like everyone else. But I'll go kind of trade what I see day to day, week to week, and we'll do our best. So that's a good video series to check out. I shared the last video I did, talked about the current environment, playing defense, being protective. Currency is a great place to hide out for risk on, risk off trading. You have a bull and bear market, you can trade currencies. Obviously, if you have bull markets, it's much easier to make money in the stock market with a bull market. It really is. Bear market, you can hedge a lot, you can make a lot of profits hedging, but if you own equities, you have to play defense and make sure you're lowering your cost basis. Otherwise, you can be in easily as big of a drawdown as what the overall market is, if not more worse. So defense and playing the downside, at least in some stabs. Take some stabs to the downside. That's fine, but it shouldn't have to cost a lot of money to do that. Okay. All right. Any other questions? Any other charts? Any other requests? So Wall Street's open. We're going to get positioned for equities on demand. I'll probably look at, like I said, the indecision this week. We've got our credit spreads above and below that are out a couple more weeks. So I think I'm just going to take a stab at indecision for the week and see what it costs me. I might do an inexpensive one, and we'll do something that probably costs us like anywhere from 40 to 60 cents for the week. And if it pays us, hopefully it's a 3x or better. So we'll see. Okay. Dollar CAD, Catherine, we're already filled on it. I got filled on dollar CAD last week at 36.75. That was a stop sell trade, and we got filled on that. I think it was Friday that we got filled. Weekly pivot's already been hit. We're moving away from it. What I'm after on this dollar CAD is this inefficiency zone and this pivot cluster. We have a weekly and monthly pivot right down here at 35.50. And if we get down to 35.50 or lower, I'm taking profit. So that's going to be about 125 pips of profit right there. I would expect that price stays below this trend line. So I don't want to see price get back above 37.50. If it does, I'll probably just exit. So right now I'm short. Okay, we had a gap higher on oil. Oil could retest 90, or it could retest the yearly pivot and resistance at 93.95. We have inflation numbers this week. So if all of a sudden oil, gas, energy, food, shelter, if somehow those are sticky, Inflation is going to go higher. So the print this week will be important, right? The forecasted print for Thursday for the U.S. is 3.6. Where's it at? Right here. Thursday. Here. 3.6. So I would say it'd be pretty rough for the markets. And I say rough for the markets, like the stock market will probably hate something that prints like 3.9, 4%, right? That's stickier inflation. The markets might love a 3.5, a 3.4, or we had as low as 3.0 back in July. So are we trying to navigate through this like 3 to 4%? I've seen readings, as low as sub 3 by the end of the year, into mid 2s by 2024, and I've also seen the U.S. and the Fed will not be able to get inflation below 3%. It's never going to happen. We're going to go back up to 6 or 7 or 8% before we come back down. I don't know, right? But I do know the market is watching. I do know the Fed is watching, and there would be, I would guess, Wednesday, Thursday combination. There's going to be some good volatility to trade this week. So that's what I want to see. Okay. So anyway, that's the week. All right. I'm going to wrap it up here. If you have any other thoughts, questions, let me know. And you can join the Discord channel, throw it in the free chat thread. And I will see everybody in the trading rooms this week. Let's have a good week. Okay. War in Israel considered very inflationary near term per business. Okay. I mean, again, we'll watch and see. I mean, when I look at what's happening on oil, is there a catalyst for oil? I don't know if it's, war in Israel is why we're getting a jump in oil. Let's see what we have here. Higher long-term rates due to higher term premiums. There may be less need for the Fed to raise rates. Dollar weakened. U.S. Treasury. U.S. is likely to take steps to enforce $60 a barrel. Interesting. Oil stocks up pre-market as crude rise. Middle East conflict. Let's see what that's about. Let's see what they just have on oil. Goldman Sachs bullish on crude oil with Israel Hamas at war project. Yeah. I mean, yeah, war typically is, especially look, Middle East war is that's gonna definitely subject oil to some fluctuations of volatility. So I mean, short-term volatility for sure. Bigger picture stuff. I mean, oil's probably pretty capped at 100 unless this conflict going on plus production cuts from OPEC nations. Again, that's honestly the biggest pain point for the U.S. And again, there could be anti-U.S. moves out there geopolitically. This landscape's been discussed, but the hardest part for inflation for the U.S. would be getting oil prices back up above $100. That would be pretty traumatic for the U.S. So U.S. might take action, but they're not nearly as powerful as the entire OPEC and just major oil producing countries. And conflict war, yeah, it's going to affect supply chain. Supply and demand is all oil movement. So something to keep an eye on. Yep. So, and like I said, this combination with OPEC and Saudi Arabia and OPEC members, that's going to be ultimately where we watch and see where oil goes. Look, you're going to have some oil bulls that are salivating over this, and you're going to see that there's going to be macro analysis that says it's going back up to $130 a barrel. Maybe it does. It might also be right back up to the highs at 90 and then fade all the way back down to 70. Who knows? So I'd say just watch the chart. I don't have a long-term position on oil because all this stuff could be, short-term fluctuations, lots of volatility, lots of uncertainty, and that's what the markets love. Just all sorts of crazy stuff to digest. Okay, so all right, we'll go from there. All right, I'll see you in the trading rooms. Thanks. Have a good week, and I'll be back here on Friday to wrap up the week with you on YouTube. Thanks, everybody. Bye.